All right, welcome back, everyone. I have a return guest. I think this is his maybe third time on my channel, but I have Han back from Byte Sized Investments. So welcome back, Han.
Hello, everybody. I'm Han here from Byte Sized Investments. Thanks, Mark, for inviting me here.
Yeah, I love catching up with you because you're doing some amazing things out there. So why don't you kind of give my audience a little recap on what you're working on right now?
Oh, yeah. So thanks for asking, Mark. So basically, I'm from Singapore and I invest in cash flowing rented properties currently in the Midwest. And of late, as I was chatting with Mark off camera just now, that I just completed a course, a batch, where I taught my local community on how to buy cash flowing rented properties overseas remotely and safely. The backdrop is that from where we are, Singapore, we are in a very high pricey, appreciating gateway city country market, housing market, where the houses, the properties are very expensive, but they always appreciate. But at the same time, they don't cash flow. So I'm just offering an alternative investment approach so that that whoever are not comfortable with whatever that they are investing in or whatever that's available in their in around around their area, they can there's an option out there if they let's say they go through my course and then they will be able to have access to a bigger market like the US, and then they can have options with the various markets, the cash flowing markets, and be able to have access to buying properties that cash flows and appreciate at the same time, safely and remotely. Yeah.
Cool, man. So how's that going? So do most of the people that sign up for your course, are they in Singapore currently?
Yes, that's a good question. So, most of them are from most of the graduates are from Singapore because that's where we sort of our social media markets ourselves, or our social media have the algorithm just matches us with our local communities. But we are fortunate to have a few very interesting participants that found us and have faith in us and join our cause. So we have someone from Guatemala, we have someone from Ecuador, we have someone from South Africa that joined us also. Yeah, so these are some of the non-Singapore people that also joined in the course and also study. And they are, but the thing is that they are already interested in looking for US properties, but they just somehow wanted to have a more structured way of how to, do the view analysis, how to, mitigate and perhaps how to buy remotely. Because we buy properties like few thousand miles away and how do I say many time zones away, and the process might be a little bit different. So there's definitely some things that you one would need to understand a bit better before being before jumping in without looking. Then that would be dangerous because then they do not know the process, that they may have unexpected stuff that they didn't anticipate because they didn't, educate themselves, and then they might end up not hitting the desired returns that they want. So what I did was try to, with the experience that I have, package everything into something that's more structured, and then so that they can go along and so step by step copy paste to whichever and context to whichever market that they are in.
Oh, nice. So that was going to be my next question. So, why don't you remind people what market you invest in, and then do most of your students or graduates, do they invest in the same market, or they kind of look for their own markets that interest them?
So I'm in Columbus, Ohio market. It's in the Midwest, and we are also looking in Cincinnati, Indiana. But I'm contemplating of Pittsburgh, but I
No,
shall not mess
no,
around
you
with
don't want to
you.
go there.
Yeah, I know. Big brother is over there. Yeah. So and my graduates, the graduates of the course, they are looking in the, so we don't recommend people any markets. We have fundamentals and criteria to look after. broadly speaking, cash flow. They have to look at the laws. You have to make sure that the market, the city is growing. It has a good, booming, resilient economy, stuff like that. Oh, natural disaster is another thing. Yeah. And then so these are some of the things that I hold. These are my covenants that I want to make sure because I spend so many hours working hard for money. I want to make sure whatever I invest in is definitely safe and sound. So I share principles, data driven principles, and then they can do their research and decide on the market. But I guess whatever that I shared, they are pretty impressed. So most of them are looking at Columbus, Ohio, some in Cincinnati. I do have a couple that are looking at Cleveland. I think one of my graduates might be closing on the property. I have a check-in with him in a couple of days time, and yeah, maybe after that I can share more. But yeah, what I understand is Cleveland, Ohio is where they are looking at. These are all cash flowing markets with decent growth in the city. So that's why they end up there.
Man, I love it, man. So like you said, a lot of your graduates or the people that sign up for your course, they have some interest, right? Like they're trying to get into real estate. They have this vision of maybe improving their retirement account or their future retirement. But what would you say is maybe the thing that holds them back or biggest fear for them actually getting started? Like what is kind of that common thing that you hear from a lot of them?
I think the thing that hold them back, I mean, there's a couple. One of the biggest thing that hold them back was they within my community is they think that is investing somewhere so far, investing out of state, put it this way, or out of country for me, for us, is it safe? Because they are not exposed to the research. They are not exposed to the how do I say it, the economic development that's happening. They do not understand the housing market. Some in their mind thinks that we are buying a property in the middle of nowhere, like farm, rural area. So there's like, will anyone be, can you sell the property after that? Are you able to find tenants? So these are the typical questions that is holding them back. The the lack of understanding. But if you know, like US is in a housing shortage, unfortunately, in a housing shortage, and properties are not having problems. The problem with properties right now is that it's not that they are not able to sell, it's that they are being overbidded because there's just not enough inventories out there right now. So it is on the contrary, what they fear is actually what they fear. The it's the opposite of what they fear. Right, the market is pretty hot actually. Yeah, in general in most places. I do know that obviously with the increase in interest rate, there are some places that have gone down in prices, they have gone down in prices, but those are the sort of overvalued one because they have gone so much up and prices has just normalized back to where it's supposed to be. Uh, on a year on year pre-COVID, it is still higher than pre-COVID. But yeah, perhaps they are down from last year, but they are still higher pre-COVID. So things are still looking decently okay in these places. So that is one of the fear that they have. Yeah, so lack of understanding of the market. So that's the biggest concern. Yeah.
So this kind of leads me to my next two questions. You kind of talked about your market specifically. So, and you said, maybe prices have come down slightly. So, with prices coming down, has the rent on your properties gone down?
Actually, surprisingly, no. Because the it is still a very vibrant market for I think the market that I'm in is pretty unique because there's still growth, population growth, and it's typical in population growth in cities that have decent population growth. is because there's just not enough housing. So the moment a property is being put up on the market, there's still some bidding war that's happening because there's just not enough houses, even though prices has come down a bit. And prices has come down mostly are from the higher priced houses in the more like A-class neighborhoods.
Yeah.
For what I'm buying in the C plus B neighborhood. So they are the more affordable housing, the more middle class housing. So they are still very affordable. So I don't see that coming down. In fact, I do still see it holding, the prices are still holding and still some rent price growth over in these places. Having said that, rents are still growing, not as crazy as it was in the past. In the past 2 years, we are looking at 10-20%. Now we are still seeing maybe 5% rent growth. So hasn't gone down, it's just that the rate has gone down.
Yeah. So you bring up a good point, and I think, for a lot of people, that's kind of sometimes where the struggle is. They hear people talking about housing or real estate, and they hear these national numbers, but they don't realize that, each market is very unique. And then within each market, you have different, its own unique, like you're talking about, there's above the median, there's at the median, there's below the median. So even within these local markets, each market has different price points, and they all, act differently. And I think that's what a lot of people, and I'm sure your course helps people understand that, these national numbers that they see out there doesn't always reflect what market a lot of people are investing in. So I think that's why people have to be, getting around other people that are doing it and taking courses like yours that help them realize that if you find the right market, right, there's a lot of great markets out there, right? But it's just finding markets that make sense for you. And that's where your course comes in, helping people break down, what things to look for and what kind of makes them feel comfortable investing from such far away.
Yeah, exactly. You say it spot on.
Yeah. Yeah, man. So you're doing some great things, man. I see you on social media all the time. And I saw one of your most recent ones, and it's kind of a touchy subject a lot of time on social media platforms, and it's it's kind of a back and forth thing. But you had you were talking about your home not being a great investment. And that's something that I think a lot of people, there's two sides to it, right? A lot of people are always have their opinions on it. And there's no right or wrong, I think. I think home ownership is great, and you can build a lot of wealth through home ownership. However, I think the one thing is no one said home ownership has to be your primary residence. And I think that's the thing that a lot of people don't realize. You can have home ownership, but that doesn't mean you have to be living there, right? To build wealth. And I think that's what your post or reel was about. And you want to kind of talk about that a little bit?
Yeah, sure. I love to because this is a topic that is very close to heart. As I mentioned, the housing market that I live in, it's appreciating a lot. But then affordability becomes an issue sometimes. So, but yet at the same time, people are still. I do notice that people are still putting a lot of their hard-earned savings into these assets. Uh, Having said that, the the it I I opine that it is not the best bang for your buck. If it is for to live in, if it is to live in, I think it's fine. There's no price. There's no price to pay for great memories to be created. That's one thing I acknowledge. But at the same time, if your intent is to invest and you give up certain lifestyle criteria just to be able to buy it as an investment. hoping for, especially hoping for an appreciation for in the future, then it might not be the best approach. Yeah, because if you're able to segregate home for stay and invest in where it makes sense, like I think you mentioned before, in stay where you live in, stay where it makes sense, and sorry, stay where you like to, and then invest where it makes sense, right, where the numbers make sense. And I'm very aligned with this um, line of thinking because yeah, it's no brainer that you want to live in a place where you love it the most, and then after that invest at where you can get the best returns. That's just it.
Yep, yep. I love your stuff out there, man. You're always making me laugh, man, on your videos, man. So it's very entertaining. I like it. But man, you're doing some great stuff out there, man. I keep following you and I'm glad when we have I know you're busy, so I'm glad when we have a chance to connect every once in a while and get an update from you. And so, just real quick, so I think I saw might have been today. Did you close on a prop or how many properties are you at yourself right now?
Um, 12. We just closed on a property, so 12 in total right now. Slowly growing, slowly growing. The hope is to be able to uh, buy a couple more, maybe one or two more next year. I mean, with the high interest rate, man, you got to be careful, man. Got to be very, very careful. Stress test. This is what if there's anything I have to share right now, I'm sharing this with all my community is don't be too aggressive. I mean, be aggressive, but be cautiously aggressive. Stress test all your deals. Make sure that you have reserves too, because you know uh, it's usually when blood is on the street where you make your wealth the most. So and it's for people that and usually it's where people that where they over leverage and then they can't keep the property, and then that's where they lose the property and that's where we can come in, um, help them get off the pickle and but at the same time still be able to make some money for ourselves and get a good deal out of it. So conserve cash, don't get burned, stress test, have reserves. That's what I'm doing, man. Yeah.
Yeah, we kind of talked about that earlier, right? Just, kind of two simple rules in real estate is, number
Yeah,
one
be
is
scared.
is acquiring the deal, and then number two is not losing the asset. I mean, that's as simple as you can make it. And if you have it for in the long run, you hold it in long enough time, you're gonna end up making money. My last question though is, I see a lot of people, getting these courses out there and communities out there. Do you have any plans of taking your group or your community out to Columbus and have kind of a walk around, kind of not driving for houses kind of thing, but yeah, just getting to the communities and seeing what's there and helping people find deals maybe, while you guys travel out there?
Yeah, I'm definitely exploring that idea because as much as I preach to people that we can do the research remotely and network with the boots on the ground just to get the data sources, there are still people that would like to visit and really visually see how a Midwest sort of like a sleepy town, Midwest sleepy town looks like and how despite being deceivingly sleepy. It is cash flowing amazingly with decent appreciation, and that's where I want to have the opportunity to show them because from where we are in a very fast-paced, metropolitic, high-rise city. So it's definitely a mindset shift if they ever really observe that. So and we do have people reaching out to us, so we are definitely contemplating that and if I ever organize that, I'll let you know so you can you can join us if you want.
Yeah, I and that much. So what I was gonna do at the end was I was gonna bring it up and rub it in again. But when you gonna come out to Hawaii since your visit got canceled last
Stop
time?
it. Stop it. I hate you, man, Mark. I hate you. Hey, um, guys, I was supposed to go to Hawaii actually sometime this May, which was a couple of months ago. And I was so excited. I was like, hey, Mark, I'll be here for 3 weeks. I'll be at work for during the weekdays and at night at the weekend. We should hang out. I was talking to Mark all the time, and like I think I think 1 month before, uh, sort of my boss, because it's a different. It's not a work, but it's more like a my national obligation stuff that I have to obliged to serve. So and then they just tell me, oh, because you are away and we can't get your passport, and I'm sorry, I think we have to redeploy you somewhere. I was heartbroken, man. I was waiting for your beer.
Yeah. Yeah, I know. It was kind of funny. You were you were so upset. Well,
Uh,
well, yeah, we'll meet up, man, one day. We'll connect, but it's always fun catching up, man. I love what you're doing out there, but thanks for always coming on, man.
and I also love what you're sharing on social media and all the great lessons that you're sharing.
Yeah.
Thanks, Mark.
You know what? Before you go, yeah, where can they reach you at, man? I forgot. Where can they reach you at?
Oh yeah, can reach me at on Instagram, YouTube, X or Twitter, whatever you call it. So the Twitter handle is at Byte Sized Invest, and on YouTube is Byte Sized Investments, and IG is also Byte Sized Investments. Facebook is also Byte Sized Investments. Yeah, I will. Yeah, this is my this is where you can find me. I'll probably just send the stuff to Mark, and after that, yeah, you can share with your audience.
All
Thanks,
right,
Mark.
man. Thanks, man. Keep it up out there.
Thanks for the time.
All right,
Thanks
man.
for the chat. Thanks everybody.
Bye,
See
man.
ya.